The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 12th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome as always is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. Beliefs that go like this: change our mind and change our life. You know, oftentimes, what I find, you and we underestimate the giant capacity that we can immediately command when we focus all of our resources on mastering a single area of our lives. And for those of us that don't achieve what we truly want, well, the main culprit, is that we never really direct our focus. We never concentrate our true power. It's as if we become a dabbler, never deciding to master anything in particular. When it comes to trading and investing, dabbling just won't do. You see, just like life, folks, it's all about mastery, and that means immersion. It means that we have to learn how to master things. One of those things we got to master is time. You see, once we master time, we then realize that often we overestimate what we can accomplish in a year, and we underestimate what we can achieve in a decade. That's a good thing. That means don't give up, folks. Don't ever give up. At times, it might seem like we're not making any progress, or maybe you go through a time period where, well, you get confused. You might even get confused when you hear me use terms like A to B equals CD or Gertleys or butterflies. But here's the key. You got to recognize that confusion means one thing, and one thing only. It means that we're about to learn something. Think of it like this. The seed gets planted into the ground, and on its way up, it hits the crust of the surface of the earth. How easy do you think it is for that little seedling to bust through? Exactly. You see, most of those little seedlings hit the crust, get confused, and never break through. Yes, they give up. But here's the key. Success comes from taking initiative. It comes from being persistent and from making sure that you express the depth of your conviction with every action that you take. We must always remember this, especially when we get to that confusion level, that is that you are just about to break through, folks. You're just about to break through. You could be a moment away, a day away. Don't give up. You see, it's the universe testing us, and the universe wants to test us and understand what kind of conviction it is that we've got. It's going to test our so-called 9 lives, our 9 lives of persistence out there, and it's going to say, show me just how bad you want this outcome. And then that begs a question from you. What are you going to do about it? What simple action could you take right now to produce additional momentum or a new momentum towards some area of success in your life? Are you trying to make yourself a better trader, better technician? What is it that you really want? This much I know to be true. The path to success is to take decisive, massive, determined action, because there's no abiding success without commitment. If you want to be successful, find someone who's achieved the results that you want, copy what they do, and guess what? You'll achieve the same results out there. So the time is now to master anything that you want in your life, folks. And always remember, life is a mirror, and life will reflect back to us that which we think. I say turn your mirrors into windows, which means look in the mirror, see the person you want to become. I say become because no matter what level you're at, you're always trying to improve, and then take some massive determined action. Jump right through that mirror. Yes, let's turn our mirrors into windows. It is terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading off 31 points. It's trading out at 16,812. We've got the S&P off 3.5 points at 1940. NASDAQ down 5 points, trading at 43.26. Russell off a couple of points, 3 points, trading at 11.63. NDX 100 down 4 points. New York Stock Exchange off 7. Goldilocks up almost $6 right now, trading out at 12.66. Silver up 12 pennies. Light sweet crude up $1.48. Our call numbers 877-927-6648. Give me a call, folks. Happy to take a look at your stock chart. Priceline in the fray here this morning to the upside. It's up $13, a little over 1%. Restoration Hardware up 12%, up $8 and change. Eagle Materials, EXP, up 6%, up $5. Concho Resources, CXO, up about $3.50. Tesla up $3. Pioneer Natural Resources up $3. Palo Alto Networks, PANW, up about 4%, up $3. Intercontinental Ice, the exchange, is up $3 here. LinkedIn up a couple of bucks. To the downside, leading the charge, you've got Granger WW off $8. Lululemon down $6.53 with some volume behind its move. Illumina Inc. ILMN is the ticker symbol, off $4, down 2%. Alaska Air, that's down with some volume, I believe. Finally, this thing has got some, not that I want it, but it is showing some institutional selling. That is Alaska Air. Amazon down $4. Google off about $3.50. United Airlines, United Continental off about 6%. Down $2.60. Let's begin our day by doing what? Let's begin our day. Let's go look at the S&P 500 sectors. Let's go do that. We were taking a look at before we went off the air on the last show. We were looking at ExxonMobil, and ExxonMobil was trading into a swing point. Couldn't tell because we only had a half an hour of session whether it's with volume or not. We'll know the answer to that at the end of the day. Oh, that was interesting. How did that happen? I didn't want to do that. Oh, interesting. Okay, sorry about that. No simple link. Doesn't matter. Okay, so let's go take a look at the chart for the energy sector out here, the XLE. So this has A to B equals CD that it is trying to form out here and complete. The B point, that took place on May 7th, 9.6 million shares. As price moved through there, 7 million shares on May 29th out there, so it doesn't have the volume. Nonetheless, it's still moving higher. It still wants to go ahead and looks like make that 1-to-1 A to B equals CD. That would actually take it up to a price level of $99.98. It's at $97.97 right now. It's taken out its most recent high, which was June 9th. That had 5.6 million shares. No problem doing that today. It's already got 2.6 million shares. So you've got volume moving in at the highs out here, and that is in the energy sector, the XLE. Let's go take a look at the XLF out here. Let's go see what it is doing. The financial sector right now, it's trading out at looks like about 22.70 out here. So it's there's a new market profile that evolved today. It says it's a unfair low at support level right around where it's trading right now, right around that 22.70 mark out there. So a break below that would suggest that you'd see a deeper retracement. That retracement inside of the financial sector, I'd use the swing low back here from May 15th. I'd go from that low all the way to the high out here on June the 9th. And that says that what we're looking at is a dead cat bounce retracement, a 0.382 retracement would be 22.41. That's what you would be looking at if it can, in fact, break the support level. It's trading right now down into its 8-day exponential moving average of 22.66. It has not broken through that area. Let's take a look at the XLK. Let's go see what's going on the lead dog sector-wise inside the S&P 500, see if there's any clues here as to what it is doing, and really not doing much, just kind of trading sideways out here. So the number one sector inside the S&P 500 has just simply not done much. It's got a new market profile that began this morning. 3804 should be support. If it breaks through that, then we start taking a look at, as well, a potential deeper retracement. If we take a look at that retracement level, what I would do is I'd come off of the swing point down here from April 15th. I'd go from that low to the high. Looks like the high that may have been put in. Let's see, today's high is 38.38. 38.38 is the high out there. Let's just use this session right there. And, whoops, didn't mean to do that. And if we take a look at it, the dead cat bounce on this, normal retracement would take it to 37.14. Heck, a normal retracement actually is 36.37. So at this moment here, still pretty strong with inside the technology sector. That is the XLK out there. Let's go take a look at what the heck did I do there? There we go. Okay. Let's go take a look at, let's stay with the sectors here for a moment. Let's take a look at the health sector, the XLV. Let's go see what it is doing out here. XLV. Then we'll go take a look at the actual ETFs. For the actual sectors out here, not the actual sectors of the indices, and see what they're doing. The healthcare sector, the XLV, it's trading out at 59.82. It's got a support level that's set up at about 59.42. A break of that level would suggest that the sellers are certainly in control. But otherwise, right now, it is just trading sideways. Let's switch over. Let's go take a look at give me a moment here. Let me switch tabs. There we go. Let's go take a look at the SPY. Let's go see what the SPY is doing. Let's go see what kind of market profiles we've got out here. I'm going to get rid of the A to B equals CD patterns that are on my screen out here because there are several of them. Let's just take a look at what it is doing as we speak right now. SPYs should find some support at 194.01. A break below 194.01, and that would give you an indication that the sellers most certainly would be in control of the SPY out here of the S&P 500. Its retracement levels, if we take a look at those, let's take a look at coming off of the, we'll begin here by using the swing point right back here from May 15th. So if we go from that swing point low to the high that was put out here on the trading session of June 9th, that high, by the way, is a 196.05 out there. 0.382 retracement, 192.36. A 0.68 retracement, 190.12. Volume today so far, I've done 14 million shares. This is in the SPYs on the way down. That 14 million shares kind of going into a trading session from June the 5th that had 92 million shares. We've been trading for about 45 minutes out here. It is Thursday. Volume does seem to be a bit light at this stage here. Yesterday's pullback inside the SPY, total volume 68 million shares after making a high out there with 65 and 57. So it's not as if the SPY yesterday moved back with volume by any stretch of the imagination out there. Let's take a look at the IWM. Let's go see what the Russell 2000 is doing out here. So the Russell 2000, it's got a new market profile that began today. That suggests that 114.30, right around that range, should be support. It's trading out right now 115.71. That is the largest area of congestion, where the largest number of traders feel comfortable, both bulls and bears out there. That's where the activity is inside of the IWM. Yesterday's retracement with 30 million shares. That's after making a high with 44 million shares. That is what's called a light volume retracement or pullback. So far this morning, you got 7 million shares in there in the first 45 minutes, first 50 minutes of trading out here. We'll see what kind of volume it can muster up today. But yesterday's volume here, nothing bearish about yesterday, more bullish from the standpoint that it pulled back with light volume. You can look for 114.30 to be a support level inside of the IWM, inside the Russell 2000. When we get back from this next break, we'll go take a look at the Qs. We'll go take a look at the Dow Diamonds. We'll go see what kind of retracement we've got going on there. Right now, we've got the Dow is, where is it? That Dow is off 30 points, trading out at 16,813. S&P down about 4.5. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Get the Dow's off 32, S&P down 4, NASDAQ composite off 8 points right now. New York Stock Exchange, interestingly enough, is only down 10 points out here. So, and let's see here. You do have net declining issues of minus 586. So, bears definitely were able to, by one issue yesterday, we're able to take control of the market to the downside, but we're not seeing any kind of price damage out here. And that, again, more bullish than bearish out here. I did say we'd go take a look at the diamonds and the diamonds and the Qs. So let's go do that. Then we'll come back and take a look at a couple of other things out here. So as we take a look at the diamonds, Dow diamonds right now, they're trading out at a price level of about 168.04. The diamonds here, interestingly enough, the DIA had this morning formed a new market profile, and its unfair high is priced out at 167.68. So we've seen some damage price-wise. We've seen some damage in the Dow. Certainly, the transports are showing the most amount of damage out here. Yet, if you use a market profile system as an area to look for places of support and resistance, the Dow diamonds have not broken through a resistance level yet, even at 167.68. Now, that's moved up. It used to be at about 167.15 or so. So this is a new level for it to be paying attention to. So actually, the Dow diamonds are actually still they are bullish. If you take a look at yesterday's volume in the diamonds, 3 million shares to the downside so far today, 1.4 million shares. So, compared to yesterday, you've got some volume that is increasing as we speak right now. Made a high with 2.7, made a high with 2.8 out there. So just looks like your normal flavored retracement. Looks like the B to a C of an A to B equals C to the upside that is actually being formed as we speak right now. So that bodes well for a market that pulls back today into Friday, maybe even Monday, and then boom, off to the upside out there. All depends on the pullbacks out here in the market. That's what the diamonds are doing. Let's go see what the Qs are doing here. Down 34%, down 34 cents off about 0.4% out here. They too are trading into their range, their market profile range. It's got support. So their support levels at about 92.31. You're trading 92.53 right now. This here is nothing more than a market moving sideways to work off an overbought condition. And that is as bullish as you can humanly possibly get. Well, I don't know about humanly possibly get, but certainly from a technician standpoint, working off an oversold condition and moving sideways with light volume. One might argue that could be distribution. And inside the Qs, okay, I can go with that. I will also say that without doing any kind of damage whatsoever, this more likely, as opposed to being distribution, is just working off an overbought condition, getting ready to charge ahead further for a good portion of the summer, a very good portion of the summer. So this should be a really nice summer market rally that's out here, and the retracement after the last 2 days is actually just really confirming that. Now, what we're going to need to see out here in order for all of that to stay in place is we're going to need to see our euro-yen currency pair, unless this totally decouples from the market, which it can from time to time. We're going to need to see this thing reject its lows out here because it's got a nice Gartley buy pattern that form. Look at that Fibonacci, those Fibonacci numbers, a 0.786 retracement, a B to a C expansion to form that D point, which was a 1.618 out there. So that is nice. That says that 137.96 is important. You're at 138.04 right now. Now, that's the daily chart. Here's where taking a look at an intraday chart can help us out to gauge what's really going on. Excuse me, I'm going to take a look here at the 120-minute time frame. Now, the 120-minute time frame, what you'll notice, it did break through the hammer low yesterday. I didn't like seeing that. That was the hammer low, which was from 5 a.m. That was your 137.96. We saw one close below it. So I always like to get a second opinion. I think about the best thing that you can do out there is get a second opinion. What does that mean in trading? It means wait for one more bar for confirmation out there. In this case here, waiting for one more bar got priced back in there. So it said, "Ooh, I was almost off the cliff. I didn't like that," and it got back up above that area. Now, the interesting thing here, if you take a look at the last time that a low was formed out here inside this currency pair, you had a price relative strength divergent pattern. That means and what it did was it moved lower, but it did it with less weakness out there, and it formed that hammer candle. Now, we have the same style of pattern that is in place as we speak right now. The relative strength indicator that we're looking at is from the bar that took place at 11 o'clock yesterday morning, gets down to 23.95. Looks like I'm going to have to just kind of leave you hanging for 4 or 5 minutes or so. When we come back, I'll tell you what it's doing this time around. 877-927-6648. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 50 points. S&P is down 7. Composite off 19. Before we went to break, we were taking a look at the Euro-Japanese yen. So let's go pull that up on our screen here again. Let's take a look at the 120-minute time frame. And back when I was making the bottom, back when I was making that 0.786 Gartley buy pattern on the daily chart, what you do is you flip down to some shorter term time frame here. In this case here, we're looking at the 2-hour chart. And what was nice about the bottom that I was making back then, that 0.786 Gartley buy, was it formed one of my favorite patterns out here, one of my favorite reversal patterns. Doesn't always work, but man, it works really well. I mean, really, really well. And that's where it made a new low. Did it at the trading session of 5 in the morning. That was on May 29th. As it was making that new low, it was doing it with less relative strength, but most importantly, as a strategy, it had a hammer candle that formed right there, and that was really the key, and it had follow-through on the next session. Now, take us forward to where we're at in the market as we speak right now. We saw the market make a low. The RSI reading was on the bar at 11 o'clock in the morning. That was on June the 11th. That RSI reading gets down to 23.95. As it makes that lower low this morning at 7 o'clock in the morning, it makes it here with a RSI reading of 35. 35 versus 23. Now, that's just one phase of it. Now, what was nice in the very next trading session, coming in at 9 a.m., was the mere fact that you had a bullish engulfing candle. One of my favorite reversal signals, hammers, bullish engulfing, bearish engulfing, shooting stars, morning stars, evening stars. Some of those are my favorite patterns out there. Gaps, gaps up or down, those are also favorite patterns out here. Now, here's the problem. The problem is this. And we got still time left in the trading session. We've got to wait till 11 o'clock, so you've got 24 minutes out here. But what I dislike is that we don't have follow-through. We don't have a second confirmation out here. Now, because this body of this candle, it took place here at 7 o'clock, was so small, the body of a candle is the essence of price out here. Depending on where the euro-Japanese yen closes, it can still maintain the integrity of this. It's not as good as having moved higher, having the continuation of that bullish engulfing candle. But what I can tell you is that on the 120-minute chart, it appears as if the euro-Japanese yen is trying to form a bottom, as if it knows somehow that on its daily chart that Stevie-san here says, hey, if you can't hold this area, you're going to turn into a butterfly, and it doesn't apparently want to fly away. But we'll see. We know what we're looking for. If it was making a lower low and it was doing it with more weakness out there, that would be signaling that this pattern here is going to fail. At this stage, we don't have a confirmation that it's not going to fail, but we are getting indications that maybe it wants to hold out there. And that's going to be real important with regard to the direction of the markets out here that you and I trade. So you put that together with light volume pullbacks out here. Not that the markets won't retrace because they're very overbought out there. What you should be looking at, in my opinion, especially as the volume maintains a light-ish type level, is where is it that you come in next to the upside inside of the markets out here. So that is my take. As long as we're in the currencies out here, let's go take a look at some other currency pairs. Let's look at the euro-US dollar currency pair. Here is the weekly chart on my screen. The weekly chart shows that last week, price was able to maintain and hold the descending price channel. That is I know you see a lot of lines on my chart, and sorry for that, but all those lines are actually necessary in order to help us gauge what's going on inside a market. If we take a look at the red diagonal line, that's from the upper left to the lower right on the upper portion of my screen here. That is a weekly descending price channel, of which the euro broke out of here back on the trading session of the week of February 28th. It breaks it. It never came back and tested it. Well, it didn't do that until it formed the doji candle week of May 30th out there. Doji candles at lows don't have a whole lot of meaning to me out there. May 30th, which that was the doji candle out there, but what it did do was it tested the descending price channel and closed above it. It rejected that area out there, so that was a short-term, or intermediate term, I should say, bullish. What did it do last week? Same thing. It's testing that area, it rejected it, but no kind of reversal candle or anything, just a high wave session from last week. Now, its meaning is it's lost its way. Now, the question is this week, has it refound its way, and it's moving lower out here, and right now it's trading just inside the descending price channel. It's also trading right into a quasi area of support. You had a little dark cloud, not a dark cloud cover. You had a piercing candle that formed here on February 7th out there. We'll see. But it's so far it's rejected that area, and that's the euro-Japanese yen. We'll see what it can do come the end of the session tomorrow. Let's go look at a couple other currency pairs out here. Let's look at here's the weekly chart for the euro-Japanese yen. By the way, you can see it's traveling right down to that red horizontal support line. If it breaks that area, plus the 0.786 Gartley buy pattern, then this is going to be perhaps a more serious retracement in the market. So we'll just have to, that's a weekly chart, so that means tomorrow's session is very important. If I take a look at the U.S. dollar, Japanese yen out here, it's not signaling that it wants to break out topside. It will do that if you just simply if you do trade the U.S. dollar, Japanese yen, the confirmation that it will want to trade topside here is breaking the channel line. Why do I say that? Well, if you take a look at the last time that the U.S. dollar, Japanese yen created a channel line, it takes you all the way back to the sessions back here in May of 2013. And what you do is just use the body of the candle out here. And that would be, as an example, the May 23rd open. That's right around 100.82. Uses your next session out here, the open from September 11th. That is it's a daily chart we're looking at. 9/11/2013. That open was at 100.37 out there. And when the U.S. dollar, Japanese yen broke that descending price channel line, that happened to be right here the trading session of November the 8th. That was a signal to certainly not be short the U.S. dollar, Japanese yen currency pair. And then you can see it made a nice move higher. Completed an A to B equals CD pattern. There are a number of them that were around, one of those being this one right here. Let's go see that down to here, and it made a little bit over a 1-to-1 A to B equals CD to the upside. So right now, it's moving lower to the upside. If you were short this currency pair, just make sure you've got that channel line drawn in. You don't need the bottom portion of it. You just need the upper portion of it to be focused on and paying attention to. Let's see what the Great British Pound is doing as long as we're in currency pairs out here. Here's the daily chart for the Great British Pound. Really, it's the weekly we want to go and focus on at the moment. Why? Because that has got a longer-term trend that says that it wants higher price out there, and it wants substantially higher price. It's saying it eventually wants to get into the 180 mark out there. That'll say the pound would get stronger, the U.S. dollar would get weaker out here. That is a long-term consolidation pattern that it had broken through out here. At this stage, if I put up the weekly chart and I put up the weekly chart's up, the relative strength indicator, neither overbought nor oversold. It did start to get overbought. This was back on February 14th, 2014. So really just kind of moving sideways here. That's the Great British Pound. Let's go take a look at the ES Mini. Let's look at a 120-minute time frame chart out here. Let's go see what it is doing. Let's pull this over, look at the Rhodes momentum indicators out here. This morning when it broke through this bar, it did, let me get the cursor out here. When it broke through this bar right here, that's a Rhodes momentum signal. That was the 8 a.m. low from when was that? That was from yesterday, June 11th. That low was 1940. That was signaling, okay, sellers are still in control of this market, and you're looking at a further retracement. We can see another Rhodes momentum signal. Let me just see it. Let me reload everything. Yeah, is being formed here right now. So these green signals indicate that the sellers are certainly in control. The trend has changed from bullish to bearish on a 120-minute time frame out here. Now let's go put that together. Let's go take a look at some market profiles for the ES Mini. Let's look at that on, let me put this up here. Let's go take a look at what it's also doing on multiple time frames. So let's look at the 120-minute chart out here. It also had as a support level. So mine was 1940. The interesting thing here is you'll see 1941 was the unfair low, which it broke below. So you get two trading systems utilizing different math in order to be able to get that find different support levels, both of which have been broken through out here. So what is that setting up? It looks like you're now potentially setting up the an A to B equals CD to the downside out here. But let's go take a look at the 240-minute chart first. 240, it also has broken through its support level, which was at 1940. Let's take a look at the A to B equals CD, the downside inside the 240-minute chart out here. Your A point is going to be the high. That took place on June 9th at about, let's say, a 4-hour chart at 12 noon out there during its session. I'm going to use it as a B point right down here, June 11th, and the C point's going to be right here. So 1-to-1 A to B equals CD says 1931. I would say it would be more than 1931. You're at 1934 right now. More likely 1927 to actually 1921 as they move lower inside of the ES Mini. Let's go to Daisy in Denver. Daisy, thanks for calling. Thanks for holding. How are you doing this morning?
Okay. How are you, Steve?
Excellent. Thanks so much for asking. Now, I see you're asking about the TNA.
Right.
That is the triple 300% ETF for the Russell 2000. Are you in that or looking to get in? Tell me what you're doing, how I can help you.
Looking to get in.
Looking to get in. Okay.
Wonder, how risky it is right now.
Well, I wouldn't do it until you go ahead.
Until go ahead.
Well, I wouldn't do it until we see some kind of reversal pattern or signal out here. It's natural for the market to be retracing, which it is doing. The Qs gave us the largest, the Qs are the strongest, and they gave us the biggest signal that the market should retrace. And now what we got to do is figure out, where is it going to retrace to? And you've got to wait until you see some kind of reversal signal. Now, if you're looking for, I guess the question that I would always have is, what is the time frame that you would use to try to formulate that signal out there?
Well, you had talked about this rally going on into the summer, and so that's
Correct.
what I'm looking at.
Okay, and absolutely, and that means that we're going to see markets that are going to not always go in one direction, so they're going to retrace, and so I do believe that this rally goes through the middle of August out there, and that means you got to pick your points, and so the question becomes how do you do that? And I think you've got to use a number of tools out there. Some can be retracements, some are tools like I share with listeners each day, price, relative strength, divergent patterns, things of that sort, candlesticks, the Chapman wave. There's a number of different patterns that, one can use out here. If I take a look at the Russell 2000, we'll just take a look at the Russell 2000, take a look at some multiple time frames out here. I do have a little 10-minute delay on this, so it's not going to matter. What I would say here inside the Russell, let me do this here. If I'm taking a look at the daily chart now for the futures contract, the reason I'm looking at the futures contract is because it's providing us with the best signals with regard to potential support as far as market profiles. And right now it doesn't appear to have broken through that level, which is 1149.84. Now the reason that I say that, Daisy, is that if it does break that level, then that says that the sellers have control of the market, and so it would be too easy to buy right now. And the first point that you might want to take a look at is when you see some kind of bullish reversal signal out there, and so that means you've got to you really should study Japanese candlestick charting in my opinion in order to be able to help you make that decision. If I look at just retracements from a low of May 15th to a high out here on the trading session of June 9th, normal retracement says 1136. A real normal retracement is, good retracement. A good buying opportunity would be in the 1112 area. And that's your 0.618 retracement. So that's if 1149, in fact, cracks on the futures contract. And that's really what I would be looking at. But I would pose this question to you. And not that the Russell 2000, which has had some nice signs of strength over the past couple of trading sessions, but I would say, why would you be looking at along in the Russell versus the S&P 500 or the diamonds or the Qs? Just so so I can assist you there.
Well, it was just that it seems to be. I'm
not trying to talk you out of it, so I'm not. But I am.
Well, I've been watching. It goes down a lot more, but it also goes up a lot more.
Well, there were some days where it. Let me do this here.
Because it has been, the weaker one, it seems to surge more when it's on its way up.
Here's what I would do. I won't talk you out of that trade upon its next confirmation that we've seen a nice buy point. What I would do is I would go ahead and split it between two areas. And what that means, what I'm really signaling there is if the market's going to continue with the summer rally, it'll be the NASDAQ that leads things up. It should be. And the NASDAQ has been the strongest out here. Right. So I would at least put some money into that, or I would go take a look at the S&P 500 sectors out here, and I would maybe take a look at what's been strong out there. And inside the S&P 500 sectors, the technology sector, has been strong. The energy sector is on fire. It's up 67 cents right now. So I would. It's not that I disagree with the fact that the IWM, because the IWM should also help to lead the way. But I would.
Spread it out.
Yeah, spread it out just a little bit. Okay.
All right. Great. Thank you so much.
You bet. Thanks so much for calling. That was Daisy in Denver, Colorado. Right now we've got Dow's off 70, S&P is down 9. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow is off 61 points right now. S&P is off about 8. Composite down 19, Russell off 6 points, the NDX 100 off 18 points. The New York Stock Exchange is the laggard out here. Something to think about. It's off 24 points, about 0.2% as we speak. Lead the charge, the upside in the markets is Chipotle. It's up about $9, nearly 2%. Restoration Hardware up a nice 12%, up $9. Priceline is up $8. Eagle Materials, EXP, up 6%, up 5%. Intuitive Surgical, getting in on the fray, up $3 and change. Land's End up $3. ICE Intercontinental Exchange up $3 as well. To the downside, you've got Grainger Worldwide, GWW off $8. Illumina down 7. Lululemon down about 7. Google's off 5 and change. Amazon down 5. Alaska Air off 4. United Continental, United Airlines down about $3 out there. Now, let's kind of summarize where we're at in the trading session out here. You heard with the last caller with Daisy in Denver, that my expectation, nothing has changed inside my expectation of what the markets are doing. The Qs have been providing us with the biggest message. I'll show you out here. They provided us with the largest message that there's going to be some kind of retracement. The depth of which it can't do that, but it's been giving us the best signals that it wants to make a retracement. Why? Because the Qs make lows with high volume and they make highs with light volume. And 1, 2, 3, 4, 5, 6 of the last sessions out here inside the Qs were light volume. Sometimes folks will say that's a distribution up at highs. The Qs have a totally different and unique characteristic when it comes to volume. Why? I can't tell you. It just does, and we just go with it. You'll see no real price damage here inside of the Qs, no volume off the high. It's, in fact, everything that you wanted to see, especially with price being, overbought. With it being overbought, it's got to work. It's got to work that condition off, and it does that by moving sideways or pulling back out here. And so I still do believe a large summer rally. Now, how long it moves sideways in the consolidation zone, that I can't say. There was also another message that the market wanted to go ahead and maybe move sideways or pull back. And what's that? That's, if we take a look, you might remember and I just noticed this morning here, before I was coming on the air, as I was just flipping through some charts. Consolidation patterns, great patterns out here. In the case of the ES Mini, this is what we're looking at right now, and it's a daily chart. It had a nice consolidation pattern. It was a 112-point move out here. And price consolidated, broke out. It was a false breakout as price came back into that area back on April 10th. But it finally broke out and then retested it one last time. That was on April 28th. That gave a price projection of 1957. 1957 was the projection of the consolidation. There was an A to B equals C to the upside. Gave us a price projection of 1957. Folks, it made a doji candle on June 9th, and it did that, and it got up to a high of 1954.75, 1955. You got to love that. So it completed its pattern as well. So there was another message. Now, things can get a little bit more serious if we see this. If we see the VIX index get above the 50-day exponential moving average, that would be the 1272 mark here, 1229 right now. If it closes above 1272, my outlook hasn't changed, but it does say that the retracement will be deeper out there. And then it gets above that and stays above that. We'll just simply have to continue to watch patterns. We'll continue to watch volume. But this stage here, I'm not going to expect anything. I'm going to be watching to see if, in fact, that acts as a resistance area. Not that it can't spike it intraday, but does it continue to close below the 50-day exponential moving average? Folks, it is Terrific Thursday, the U.S. Open. I think they've already teed off out there, so have a great Thursday. I know I will as I catch a little bit of that golf. Have a great day. Look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.